Hi, everybody. I'm Dr. Debbie Frank, and today we're going to learn debits and credits. So, we're going to learn this is the important part of the new language of accounting. So, as a reminder, we're learning a new language, the language of accounting. So, whatever these words mean in the English language, they'll mean something different, most likely in the accounting language. And so, this is a perfect example with debits and credits. In accounting, the word debit, all it means is left side. And credit, all it means in accounting is right side. Don't try to come up with any other fancy meanings for those words. That's what they mean in the language of accounting. And so, for you, as I'm already saying that, let's write that to remember. So we have debit here, and that's left side. And then we have credit, that's right side. All right, so we're going to use my mnemonic to help us remember what goes on, what increases on the left side versus what increases on the right side for these particular accounts. And so we'll use my mnemonic dead curls. So I'm into fitness, and so I remember dead curls by thinking of deadlifts and curls, but you can remember it any way you want to think of. You can think of, so I'm in Florida with the humidity. And so as soon as I curl my hair and walk outside, I have dead curls. They don't stay in. The curls don't stay in. So that's another way to remember. So that's our mnemonic there. Some like to teach with the U. I don't teach with the U in curls. So the U is missing, but we'll survive. It spells out. It's still good. So we can see here this big giant T account that we have. It is telling us what each particular category of account, what side it increases on. And that account, whatever side it increases on, that's that account's normal balance. So we can see I have a big blue arrow there reminding us that this is the normal balance side for these particular accounts, and that is also known as the side that it increases on. All right, so we're learning left side, right? Debit side, credit side. Cool, that's all they mean. So on the left side, the debit side, we can see here using our mnemonic dead curls, the E for expenses increase on the left side. So whenever we're adding a new balance to our expense accounts, we're going to increase them, keep adding to them, and that would be on the left side. All right. And then every time maybe we get more cash, because cash is an asset, so it will increase on the left side, the debit side. And same with dividends. Dividends will increase on the left side, the debit side. If you're in college accounting, then instead of dividends, that word is withdrawal. So I have that written there as well. But we're learning financial accounting. But if you were in uh, college accounting, or sometimes I see it as accounting tools, that's sole proprietorship. So instead of dividends, they have the word withdrawals. Okay, so now on the right side, whenever revenue, we're getting more and more sales. We want to keep track of all our sales. We're going to keep increasing that sales revenue or service revenue account. We will keep increasing it on the right side, the credit side. Perfect. And then liabilities, we want to keep track of all our debt that we have. So if we're taking out a new loan or borrowing more money, or we owe a vendor money, those accounts are going to be increasing on the right side, the credit side. And same with stock. Stock will increase, common stock will increase on the right side. And we can see I wrote capital in case you're in college accounting watching this video. So those words are different, but we're gonna do our focus on financial accounting. So, okay. So let's practice with this new mnemonic that we learned, and let's do some practice ones. So we have some practice ones here for us. I'm going to go ahead. My face will probably disappear from the camera a little bit, but we'll survive. I'm going to write in here a new T account for us with our dead curls. Make sure my little pin's working. There we go. All right. Um, and we're going to start making our big T account. I recommend, if you're just starting out on learning this, write out your mnemonic in the corner of your paper. That way, it's always there for you to refer to. And so, as a reminder, tells us what happens when the account's increasing. So if the account's decreasing, oh, it's the opposite. So we'll do the opposite of what our little cheat mnemonic dead curls tells us. All right, so we have D for debit, right? And then we have C for credit, all right? And then we're going to spell out dead, D-E-A-D, perfect. And then curls, missing the U, will survive. And then we have the E is expense, The R is for revenue. Okay, I know my head disappears because I'm leaning over and writing on another screen, but it's okay. Liabilities, dividends, and then stock or common stock. All right, and then if you were in, if you're watching this video and you're a college accounting, then instead of dividends, you have withdrawals, and instead of common stock, you have capital. That's okay. All right, so this tells us what happens when it's increasing. That's the normal balance side. So now we're going to go through and we'll have to practice a little bit. I'll give you this paper, this worksheet to use as you go along with me. So we're looking here and we see we're going to identify whether these changes are going to be recorded on the debit side or on the credit side. So they want us to write DR or CR. So it says here an increase to accounts receivable. Okay, well, what type of account is accounts receivable? That is when the customer says to the company, and we're recording for the company, right? The customer says, put it on my account, I will pay you later. And so it's going to become cash very, very soon, just not yet. And so, but soon, 30 or 60 days, hopefully we'll collect that cash. So accounts receivable is very similar to cash. It's usually written right below cash, so it's an asset. All right, okay. So we know accounts receivable is an asset. We see our cheat here. We're saying we're having an increase. Oh, okay. Well, let's use a different color. How about we change this color a little bit? I know I'm going to get fancy here and use up time, but we'll be okay. Let's make it, I don't know. Let's make it a brighter blue or something. There we go. All right, so we can see that accounts receivable is an asset. All right, so increasing to an asset, oh, that's a debit. So we got DR. That's cool. All right, we have unearned revenue. So this is that tricky one. Sometimes the people teach with the U for that in DEAD CRLS. So I already kind of gave you a hint there. It's saying it's decreasing, but let's talk about unearned revenue. So that is when when the business actually collected cash early. They got paid early from the customers, but they didn't provide the goods or services yet. So the business owes those goods or services to that customer. All right, so that owing is a liability. So unearned revenue is one special liability account that doesn't have the word payable. For other liability accounts, they're going to have that word payable in it, and we can cheat and know that that's liability. Unearned revenue doesn't have that word payable, but now we know we owe goods or services to this customer. All right, so that's a liability. So if it was increasing, it would be on the credit side, right? But we can see here it's saying it's decreasing. Well, I just told you this cheat tells us what happens when it's increasing. If it's decreasing, it's the opposite side. So we can see that opposite side, well, increasing on the credit side. So liability will be decreasing on the debit side. Not too bad. All right. So now we have that was a tougher one, but now we have an easy one here: decreasing cash. So we know cash is an asset, and if an asset's increasing, it's on the left side, the debit side, and so in this case, we will be decreasing, so it'll be a credit, right side, opposite side. All right. Increase in interest expense. Nice. It has the word expense there, so we already know. So we can see here on our DEAD CRLS cheat, that'll be a debit. Increase in salaries payable. This is where my example is saying it has the word payable. So easy. Now we know it's a liability and it's increasing. So our cheat already tells us what happens when it increases. So we know it's on the right side. On the right side. So credit. Perfect. Slipped up there on my talking. All right, so next we have is prepaid rent. So let's talk about that one. We have a decrease to it, but let's talk about what prepaid rent is. So that is when the company paid rent in advance. So they paid it ahead of time. Sometimes where you are, they might have you pay rent monthly ahead at the beginning of the month, kind of like if you're living in your apartment. If you're living in an apartment, you pay your rent at the beginning of the month. You haven't used that time yet. So when you use that time, it'll become an expense because you used it up. But otherwise, you paid it in advance. So you're owed that time, that rent time. And so that is an asset to you, a future benefit to you. Future, someone will say future economic benefits. So until you use it, it doesn't become an expense. So during that time when you paid it in advance, that is an asset. So our prepaid rent is an asset account. So I'm just going to put that right there for us, just to remind you that it's an asset account. Oh, I'm going to move that down a little bit, that one. And it's telling us to decrease. Well, our cheat tells us what happens when it's increasing. And so we do the opposite. So we know it's a credit side. Perfect. Increase in common stock, easy. There it is. Stock on the credit side. Ooh, we only got two more. Maybe as I was talking, you already got ahead and you got the hang of this, but we'll finish all three of them. Increase in notes receivable. So just like accounts receivable, now it's a longer term. Accounts receivable probably going to receive the cash in 30 or 60 days. In this case, the business is probably out a year or more of receiving that payment, but they're probably receiving some interest attached to it. But the note itself might take a little longer to collect from that for the business to collect, and it still is going to become cash, and so that will be an asset as well. So we have a DR as an asset account. Okay. Next we have is a decrease in accounts payable. That was nice because it has the word payable there. And so we know that's liability. Well, and when it increases, it'll be on the credit side, opposite. So we have debit side. All right. And then interest revenue. Interest revenue, it's nice because it has the word revenue in there. But if it had only said interest, then we would say, okay, what is that? We're collecting interest. The business is collecting interest. So that would be a revenue account, and that would help us there. But we were lucky because they used the word revenue at the end, but sometimes they won't. They'll just say the business collected interest, and then you'll have to know that that's a revenue. All right, so that is an increase. So that's credit side, CR. Cool. We did a bunch of different ones using our cheat. You can see how we referred back to, until you have it memorized, we referred back to our cheat. I highly recommend writing it in the corner of your paper. This will help you as you go through identifying and even doing when we go into the next videos of doing our journal entries. All right, so this is it for your DEAD CRLS intro, under 15-minute video. Hopefully it was helpful.